Good day, guys, and welcome back to my channel. Today, we'll be talking about a valid point of interest. Let me clear my whole chat. Clear my whole chat. Uh, Without taking more time, today we're talking about valid point of interest. And in this valid point of interest, unlike other valid point of interest, we'll just talk about the rules specifically to just finding a point of interest. Like they will not talk about the rules or like breaker blocks or other blocks to be valid. This time I'm talking about the rules for everything to be valid, everything to work perfectly fine. What are the rules? So this is what I'm talking about on this video, valid point of interest. Please don't mind my indicator. I use this Asian range indicator. It helps me like it spots higher highs of the day of the last day, lows of the previous day, other stuff. These are just like forms of liquidity and other stuff. Also shows Asian stock. It's not really that important, but I just like it on my chart. But I'll be offering it. Okay, so without saying much, please let's dive into the video. And before you watch this stuff, I know it's just like 1 minute, but just encourage me. Don't most people about this video, they watch it for long, but they don't like or comment. At least like the video. So let's get into the video. This video, I won't be using GU as my first example. I like using GU for my example because GU just have this. It just GU relates to SMC trading, advanced SMC trading so well that even on the higher time frame, you see everything clearly, liquidity order block. But I like using it so much. Look, to be like repetition every time I go to a higher time frame, you can just see the same stuff. So I'm using BTC this time because of some reasons. Especially I took trades last week on BTC, so I just want to show you how everything just worked out. I didn't drop any directional video this week because not enough reaction the last one. Last one hasn't even gotten up to like 1k views. So I hope you guys do better. And on to the next. Let's do this. So the first thing we are considering is direction. Direction. Sorry about that. Directional bias. That's the first thing. For to pick a valid point of interest, the first thing will be the directional bias. Directional bias is the first thing we consider. So let's get into the direction. For this BTC, what is the direction? So I won't be going too much far time frame. No, BTC is just trending upward. If I go to 3 month time frame, basically see almost nothing. Last 2 weeks we talked about this breaker block. I think last 2 weeks. I don't know if it's last 2 weeks or something. So this breaker block was the point of interest that we are all looking at. Price was supposed to retrace to a breaker. It took out internal liquidity. You can use this as the liquidity. Let's just consider this the liquidity that price took out. This is the liquidity that price took out, and when price took out this liquidity, we have a breaker block right under there, and the target was definitely target for this stuff was definitely here. So after that, price started retracing back. When price takes out an external high when a price takes out an external structure, whether high or low, that will be a retracement. That's what everybody needs to consider. Retracement is very important in the market. That's which many people get it wrong. You start seeing people taking a lot of mistakes, especially on lower time frame, because they don't trade like they expect retracement in the market. Even on 1 day time frame, you can clearly see retracement. Price was selling downwards. What do we have here? Price retraced back up, down again, back up, down again. So retracement is very important for the market to move. Market cannot just keep moving in a particular direction. There will be no liquidity. So retracement is very important. So next off, when price started retracing downward, what did we start spotting? We started considering that the next place that price would like to buy from will be the next breaker block, which is supposedly the first breaker block that failed. So let's assume that price created liquidity with the second breakout block that failed for the first breakout block to be valid. Now we have this stuff right here. We have something like this. This is a textbook view. Okay, we have two breakout blocks that failed, and price comes use the first one to create liquidity for the second one to be valid. This type of scenario, this type of example, is not it doesn't really likely happen. Doesn't mean that it doesn't happen. It happens very much, but it's not that much that it happens. So sometimes realistically, see what happens. Price disrespects two levels, create liquidity, probably liquidity break structure, it doesn't break structure, engineer liquidity, whatever. Price comes back down and taps into that second breaker block. Of course, this point of interest is the closest point of interest to liquidity, and that's what is really important. We are all one of the rules of picking a proper point of interest is the closest liquidity, the closest POI to liquidity. So this is the stuff and pushes up. In this particular scenario, we don't expect price to come down to the first breaker block that failed. But there are still scenarios where this stuff happens. Market does anything market likes. If market is really bullish and starts reversing down, I want to see maintain the uptrend. It can decide to that might probably be a point of interest like this now, right there for price to push up, or price will come and tap into the first breaker block that failed, which is a very strong point in price and continue pushing to the upside. So I'm just saying this that yes, it happens, but when you see liquidity before the second breaker block, of course you pick the second breaker block, just like we did right here. We didn't start waiting for price to come and that first breaker block. That first breaker block that field is very valid. The closest point of interest to liquidity is definitely what we're going to choose. But something else you need to consider is even if the the second breakout block, which is this, price has already tapped into it and started moving to the upside. Then we had reversal, and reversal is coming back down. So possibly we should consider that this stuff for taking out this low, and by this low is where price tapped into a valid point of interest before pushing back up. So we should consider this stuff. This person distracts me. We should consider that price taking out this low is a sign of price being bearish. But now we still have the first breaker block that failed. Because of this is a sign of price being bearish. Doesn't mean that when price taps into it, there will not be any reaction. Because when price comes to the first breaker block that failed, we usually expect that price will react from it in a good way. But if it doesn't react from it in a good way, there is like 60% chance that at least there will be a reaction in price. So this is exactly the ideology that I used in taking last week trades. Let me drop into the chat. I know I'm kind of getting confused, and my explanation might be kind of confusing, but try to understand that retracements do happen when price takes out external high or external low. Retracement happens. That's what you need to understand. And when price taps into a valid point of interest, retracement happens. Even if it's not going to hold, like sometimes valid is not all about if it's going to hold or not. For example, now you can see this first breaker block. This first breaker block, price should not come into it again. Price shouldn't come into it again because price took out a valid liquidity, tapped into a valid POI, and then moving on. Price should have created a point of interest around here for price to continue to push to the upside. If you're thinking about price in this perspective of order flow, price should not take out this low anymore, because this low is now the valid higher low and this is the higher high. That's valid. But price coming back to the first breaker block, we have seen scenarios where no matter even the second breaker block has liquidity and price taps it and start moving broke structure. If price comes back down, price can still come back down, use the first breaker block and hold. So we know that the first breaker block is a valid POI and it has liquidity. So what even if it's not going to hold, we're expecting retracement with the expectation that it's actually going to hold. So this is exactly what I thought about when I took this trade on BTC. So I've done the first part with directional buyer. Sorry, I'm not writing this stuff out. I've written it before before the video, but I didn't write it out. So just put in your mind directional buyers. Let me check if I can actually write this stuff. Okay, I can't write it. Anytime I'm using my mouse or my tablet, my keyboard doesn't pop up. Sorry about that. So the next stuff you're going to be doing is we're going to be looking at is we'll be thinking about if our next concentration will be point of interest. Wait. Directional bias. We have directional bias at the next one, and the next one we're going to be talking about point of interest for the direction. POI for the direction. And that's the next stuff we're talking about. Directional bias is all about it's priced on an uptrend, it's priced on a downtrend. So they are kind of two the same thing. If I say directional bias and the POI for the direction, it's kind of the same thing because directional bias, I'm just trying to ask the question, is price on an uptrend or a downtrend? And you see that price on an uptrend. Was I able to identify the higher highs and the higher low? Yes, this was the higher high, higher low, higher high. Price was supposed to create another higher low and continue pushing to the upside. So now I've identified the directional bias. Now the POI for the direction, price used this second breaker block that had a valid liquidity to create the new higher high. So that's the POI for direction. And what are we expecting again? Price to use the first breaker block that failed to create a new higher high again, but this time it's invalidating the last higher low. This is now makes it a slim chance, like it has a slim chance of working out, but we are hoping on the reaction. Remember, what we are catching, we're just catching trades on 30 minutes, 1 hour, and that's we're not actually, if price continues moving up, like price was moving up here, we're just catching trades daily, we are catching trades daily, we are catching trades. We're not like holding a trade from here, swinging to the upside. Just have realistic RR. I'll talk about realistic RR in this video so that you don't over expect from the market. You don't over expect from the market. So the next okay, I'll talk about POI direction for the POI. Then I'll go to my lower time. Let me go to um should I say 1 hour? Yeah, 1 hour. Let's go to 1 hour. Let's go to 1 hour. This is 1 day time frame. The SS should be bigger and other stuff. 1 day point of interest and everything. So let's go to okay, 1 hour. In 1 hour, I'll talk about valid retracement. Probably on 1 hour, on your 4 hours. Where's that text? Let me go to my one day and write it out. Or just write it out here. Sorry, the video is getting long. Most of you don't have high attention span, like you can't watch shit for so long. So valid retracement. Okay, cancel. Retracement. You should understand what I'm trying to say. So the next one, which is the third stuff, is valid retracement. Valid retracement. That's when I actually use my Fibonacci. In case you have not watched my range trading video, in every video I'm always talk about range trading video. And what I talked about there is very important. Someone said I should make another video explaining it more. I will try and make another video explaining it more. And the range trading video, I used it on GU last week, or this week, and I used it to avoid losses. That losses on GU I avoided. The first loss was just an example of what I actually used the range trading to do, structural range, new range. That is exactly what I use it to do. So Let me validate pullbacks. I think let me go to my 30 minutes. During the course of trying to spot a point of interest, I'm going to validate the pullback. I think validating valid retracement should not come before um before point of interest, rules for point of interest. So let's just keep that valid retracement aside. As I'm looking for my point of interest, I will talk about the point of interest rules of picking a valid point of interest. I'll post it like something like an edited placard of the rules for point of interest. And this is Tony Ike's rules of point of interest. I also put it on the community part of YouTube, so you can go there and save the picture. I'll probably use it for whatever you want. So this is what I was looking at in the market when price was still here. Exactly what I was looking at in the market. Price came down, yeah, that mitigated this 1 day point of interest. I'll patiently still waiting. So price created a high. I was patiently still waiting. Remember, I'll patiently still waiting. When you're like the particular zone you're inside, it's the point of entry that is going to reverse the whole trend. Try to avoid engineered liquidity. Maybe in my next video I'll talk about engineered liquidity, so that you can use engineered liquidity the right way. Learn to use engineered liquidity the right way. So engineered liquidity is mostly traps. Mostly is very dangerous when you're trying to pick a valid point of interest. So you need to learn how to use it well. Maybe the next video I'll talk about engineered liquidity. So I was waiting for price swept the low. I was still chill, waiting, because if price takes out this high for me, that's when the MSS has actually occurred. So I was looking down, I was looking right at the market, and I was looking at the pullbacks. Price was doing a lot, and you can see that after price took out this high here. I marked it out and was like, shit, this stuff would have looked like just it's trying to like give out looking, he's trying to make someone believe that actually where the MSS occurred. But to me, I definitely know that's not where the MSS occurred. I definitely know that's not where the MSS occurred. What the price do again? Price gave a pullback. If you consider this the MSS, you see that this is first pullback. A price came back down and tapped into the point of interest. I did mark this stop out, but I didn't take this stop. I marked it out, but I didn't take it. Price tapped into it and pushed it upside, because I know that that's not the first pullback. And if I'm to take it, I know that the this if I'm trying to target a very high place, price will not reach there. So price will just cause an MSS and probably do the actual first pullback. So I was very careful. And if I decided to take it, let me show you why I didn't take it. Because the SL is so much. The SL is so much that if I took it from here to here, it would be like maybe 1 to 3. Let me check out. From here to there would have been a 1 to 3 trade. Let me check. I would have tipped it right at the MSS. It's 1 to 2 point. It's not up to 1 to 3, but I don't really trade 1 to 3. I'm just trying to like, I'm trying to pass my prop second phase. So I'm like trying to take quality setups and all that stuff. 1 to 3 is valid, very valid stuff, but I don't trade 1 to 3. I think that I should wait out, because price could still just take it out without respecting it. But it was kind of somewhere I should look out for. So when price actually created the main MSS, that's when I was interested in this market. When price created, remember, this all this stuff is happening. All this stuff is happening from the first breakout block that failed. So I have to look out, be careful. We had the MSS. What do we have next? We had the first pullback. She was valid. So I expected price to do this and come back and tap into this point of interest right here and push to the upside. You can see that never did happen. I was waiting for price right here and stuff like it didn't happen. Like all I did was wait. Price didn't come into it. So just hold on. I'm just trying to be careful, take things slowly, so that you definitely try to get something from this video. If you have questions, DM me. I might not be able to answer all your questions, like I might not be able to answer everybody, but I'll try my best to at least reply some few people. So DM me and ask your question. Please, if you've watched up to this extent, please like, please subscribe. Please like and subscribe. If you've watched up to this extent, like and subscribe. Okay, I was waiting for price here. I took out my Fibonacci, and if you watch my range video, Fibonacci retracement, you see where I talked about this stuff. So I measured from the MSS to the low. I measured to the low, and you can clearly see that price have mitigated the 50%. So price have mitigated the discount zone. So if I see a POI as price has mitigated the discount zone, if I see a POI above this my point of interest, I will consider it. I will consider it, still bearing in mind that if that point of interest actually fails, the structural range point of interest is still valid. Where is the structural range? This is the structural range point of interest. The main move, this is the structural range. This is the structural range. If a point of interest I saw up here fails, I will know that the structural range here is still valid. So that's what I was looking out for. In the market. I was calmly waiting, and you see that the market really tested patience, really tested patience, and we didn't have a valid point of interest. Price just kept moving upward, and this was my opportunity. This was my opportunity right here. This right here was my opportunity. I saw price come close and did a retracement. This retracement now was what I was waiting for. I remember, look at this single candle inducement, and if you watch my single candle inducement, my last video on single candle inducement, I talked about single candle inducement before the main inducement. I talked about it. I talked about my single candle inducement before the main inducement. This is the single candle inducement. This is the main inducement. So, why didn't I choose this as my breaker block? Why didn't I choose this as my breaker block? For some reason, this shit was too close to the single candle inducement. In fact, maybe in another broker, there's kind of a misrepresentation of charts in BTC. Especially BTC has many misrepresentation. So on another one, on another broker, this single candle inducement probably tapped into this breaker block. So this shit is not valid. So that's one of the things that made it not valid. And what's the next? Okay, the next time I want to focus on validating. I want to focus on validating my POI retracement. You see, valid retracement. That's where it comes in. Now, I was waiting for point of interest right here. I didn't see the point of interest. Now, price has created a new higher high. So now I'm trying to validate the point of interest. The high, the low that caused the high. You can put it right here. The high, the low that caused the high. The high, the low that caused the high. Remember it any way you like to remember it. This is the structure. This is the structure. So this is the new structure, the new range. This is the new range. This is the structural range. This is the new range. I'm now focused on this particular point, and I'm trying to validate a point of interest. I'm trying to validate the point of interest that we have right there. So watch as I try my best to validate it. So okay, hold on. Let me delete this stuff. What do we have? Okay, the way that people validate I'm sorry, take this thing to cover that high. The way that people validate liquidity, that liquidity should at least tap the 50% of the Fibonacci, or at least close to the 50% of Fibonacci before pulling back up. Same stuff. I'm still thinking of it. You can see this one did not tap into 50%, but it was close. And you need to also consider that we also have a single candle inducement that broke structure. You can see the break of structure. So this is the next break. This is the break of structure after the MSS. High that caused the MSS. Then the second break of structure, which is normal break of structure. The first break of structure, MSS. Second break of structure, just break of structure. The single candle inducement mitigated 50%. The main inducement was close to the 50% and started retracing back up. So it's still valid. What do I do next? I need to validate I need to validate it because I saw that the main inducement, which is this which is the main inducement, doesn't want to break structure. This shit don't want to break structure. So I have to concentrate and say, okay, this is an engineered liquidity. How can I validate it? You see, I'm talking about engineered liquidity now. So this video is fully packed. So how can I validate it? What I did is I carried this Fibonacci and placed it on the low of the 50% Fibonacci. Place it on the low of the inducement where I would have marked out this is my inducement. I placed the Fibonacci there. And what do I want to see? Let me place it perfectly. What do I want to see? I want to see price come back up. Yes, this is the inducement. Where if the price has stopped here, I started coming back to my point of interest, I won't take it. But what I was expecting is I wanted price to come and mitigate the 50% and probably enter inside a little. I would prefer if it does this, but it should come inside a little for the engineer liquidity to be valid. This is how I validate my own engineer liquidity. I don't know about any other person, but this is how I validate my own engineer liquidity. And I saw this engineer liquidity was valid. I remember, where's our point of interest? Our point of interest is the breaker block. Our point of interest is this breaker block right here. This is our point of interest, breaker block, and this is the engineered liquidity. This is single candle inducement. So fully packed. This setup was valid. But let me talk about rules of picking a proper point of interest. That's for people that have not gone past that level where they still need to know the rules, how a proper point of interest should look like. So we can see that the first rule of picking a proper point of interest is it has to trigger a break of structure or a market structure shift. I don't have to start writing this stuff out. You guys should just put it. I don't want the video to be too long. It has to trigger a break of structure or a market structure shift. What's this? What's this? Break of structure. So yes, it triggered the break of structure. Our breaker block triggered the break of structure. Look, this is the breaker block. Price broke structure to the upside. So price, yes, it triggered the break of structure. That's number one. Number one requirement is been fulfilled. The next one, it needs to have liquidity protecting it. Single candle inducement, the main inducement, which was an engineered liquidity, valid. What else? What else do we need? What else do we need? It needs to be unmitigated. Did you see price reverse and tap into this breaker block? No, it's valid. Valid stuff. Although this breaker block I'm taking from the body, but my prop had so much spread, so I need to take it from the wick in order not to miss the trade. Like cover the wick and the body. It was a very nice trade. So it needs to be unmitigated. Of course, the point of interest was unmitigated. Then it has to be the one closest to liquidity. Where is the breaker block closest to liquidity? This to me, this is this because I explained that this particular stuff that we use as a breaker block on another broker is probably tapped into it to start pushing to the upside. I will not go to another broker. You can go and check it out yourself to confirm this theory. And that to be the one closest to liquidity. So this is the 4 rules in picking a proper point of interest. So this stuff, these rules applies to both other blocks and both breaker blocks. So that's it for that. It applies to both breaker blocks and other blocks. So we have gone past that one. And retracement, slowly I also chipped in valid retracement. I also talked about valid retracement just here. And if you want to learn more about valid retracement, go to the range trading video and watch more on valid retracement. Range trade. I'll just go there, you see it. What the next stuff? Okay, we pick this up point of interest from a lower time frame from where we found our bias or where we got our bias. We pick this stuff for a lower time frame to that time frame. So yes, this shit is valid. So now let's talk about exits. Very important. Exits. Don't be greedy. When I talk about exits, I'm talking about valid RR. Don't be greedy. Don't be greedy. Don't be greedy. If you're greedy, man, just take out what the market is giving you right now. So what did I look for? I just from year to year was a 1 to 4. I had to I tip it right about here, right about here. You know how to consider commission on props. So from year to year was actually just 1 to 5 for my prop. Just about that 1 to 5. I got just 1 to 5. So on my Meta 5, it looks like I just tip it exactly. I tip it exactly before the retracement. So what am I saying? I'm targeting a valid RR, an easy RR. Price is supposed to use the first breaker block and retrace and take out everything, create a new higher highs on the 1 day time frame. That is for the 1 day time frame. Let's use our strategy to find daily point of interest. We can target specific RR every single day. That's what we are actually here for. That is exactly what we want in the market. So I took out this 1 to 5 and I was done. All this other retracement did not even really concern me because I was done. I was done. I think I hit TP on GPSD too. I was done for the day. So what else was I waiting? What else was I waiting in the market again? I was waiting for liquidity point of interest. Sorry, POI that has liquidity. I was waiting for my first pullback. For me to start considering another point of interest, I was waiting for my first pullback. I think I slept. I woke up. I saw this. I saw this stuff. Let me use my Fibonacci to measure this stuff. Sorry, this is not Fibonacci. Let me use my Fib to measure this stuff. I love this tool called Fib. I love this. I love this tool. So measure it from down here. So a valid inducement should have tapped 50%, moved tap at least 50% or mitigate 50% more, then moved or broken structure or engineered liquidity, then come back and tap a valid point of interest for more buys in the market. That what a valid liquidity should have done. I woke up and I saw a single candle inducement. I always talk about this. A single candle inducement that formed. This is a single candle inducement. It formed and price came back down. It formed and acted as engineered liquidity, so it didn't break structure. So price came back down and tapped into anything. Like this is exactly where price should have tapped into. This is exactly where price would have tapped into. So this is the clear order block. I hope you're also looking at this stuff and you're seeing that this thing just like gibberish. Price was mitigating each other while pushing up. You can see, so price came and took out the liquidity and started reversing to the upside. So what I was considering, I didn't actually check if it actually tapped into the other block in another broker. I don't think it tapped into it, or I think I checked and it didn't tap into it. So I had to confirm that it didn't tap into it. So I was thinking, okay, let me consider this whole stuff as my first pullback after the break of structure, because you can see that price has broken structure right here. You can see I'm obeying the rules of picking point of interest even as I'm taking my day trades. My POI has broken structure that triggered the first rule. Valid point of interest, liquidity, it needs to have liquidity protecting it. I've considered that it has liquidity protecting it. The liquidity, okay, I told you I'll talk about single candle. My price took it out, it moved up. I was expecting price to come back down because this is where I was waiting for price. This was my inducement and it was unmitigated. You can look at it, it's unmitigated. Look at where I marked out, it's definitely unmitigated. So where else did I have a point of interest? Where else did I have a point of interest? So I had a point of interest. I was like considering on 30 minutes. Okay, this is 30 minutes. Which broker is this? Not really showing me same stuff, but let me on 30 minutes I was like, okay, price can decide to use this, can create liquidity for this to be valid. That's what I was saying. So this actually mitigated the 50%. This stuff, I think if you watch my training video, I'll say when price now mitigates the 50%, you should look out for setups, valid setup above. I'm not above, I'm saying it's not this stuff. It's not this shit here is not the kind of above I'm talking about. This shit here is not the kind of above I'm talking about. Price that pushed a new high. If you want to say, okay, let's find a new range, we'll carry this stuff, move it up again. Okay, let's find a new range. And if we're trying to pick a new range, the new range still needs to be below this stuff, below this 50%, or price should come, see how I look for my new range. Price should come, tap this 50%, create liquidity, POI, and whatever. I will definitely take it because price has mitigated the discount zone. So price can just might have enough liquidity to start pushing to the upside. But where did I see a valid point of interest? I was like, this is a point of interest that could be valid. Now the only thing that was left for is liquidity. And if I see a valid liquidity, I'll move from this point of interest to this point of interest. So see what I saw. See what I saw. Let me take out on that Fibonacci. And okay. Okay, wait. I don't need to take out on that Fibonacci. Sorry. So what was I waiting for again? What was I waiting for? Price started reacting from here after tapping 50% or looking like, man, this should might actually do an engineered liquidity. So this is the valid higher high, and this is the liquidity. You can see this stuff did not tap into the 50%. Be truthful, be honest, it didn't tap into the 50%. And this one didn't tap into the 50% at all. And this point of interest is actually in a risky place, and it didn't even tap in. You just tap or mitigated it a little. If it had a single candle inducement that actually did the job for it, and the rest, I'll be like, actually mitigated 50%. Like price came after creating this, price actually did like this, maybe reverse back down, then started doing this thing. Then I'll be like, this is single can inducement, city main inducement. Main inducement was close to 50%, like I did the other time. I'll be like, okay, I'll take my point of interest from here and push to the upside. But you can see that stuff didn't happen. I didn't even consider this stuff again. As I just saw this stuff, I was like, man, this should, in an original liquidity should at least mitigate the 50%, or at least cross the 60-70% for it to be valid. So this shit was not valid. I didn't take this point of interest. I left it on its own, and price came, disrespected it as I thought. Maybe price would have created another liquidity here for this other block right here, but price didn't. Price still mitigated it. I was like, whatever, this is where the valid point of interest is. I was waiting for it right here. And you can see, even after following all my rules and everything, I still hit a sell. I still lost this trade. And the thing is that price was reacting or just respecting the 1 day time frame second first breaker block, but seems like price didn't, it was not valid. Remember, price had taken out a valid higher low to tap into this point of interest. So this stock wasn't gonna hold because of that. On some situation to hold, but this situation didn't hold. But no matter what it did, I've taken 5 RR from this market, and this market have just taken 1 RR away from me. So it's a win-win. So that's right. What I've done right here is I've broken down directional bias and what the POI for the direction, valid retracement, point of interest rules. I've talked about going down to a lower time frame, lower than where you got your direction from, finding a point of interest right there. Exit with a reasonable RR. Remember, external high, external low. Look at the external high here. I took external high here. As soon as price crosses here, if here cannot give me 5 RR, I'm like just trying to push it up a little for it to just be around here. I don't want to target two structures. I want to target two structures as my point of as my exit plan. I would like to, how can I consider this stuff and just target one structure as my exit plan and just move out from the market. Instead, let me find a entry and enter this market again, because I don't want price to take out an external high and start doing retracement, like 50% retracement and 60% retracement, and it's coming back to my point of interest. I don't say break even. Break even have actually made me miss a lot of opportunities. Although you can argue that break even has made you avoid losses, but those losses that break even actually made you avoid. You're supposed to lose you're supposed to lose those trades. Once you take a trade, you're ready to risk, lose that money. Don't say break even. Put your TP where you're comfortable with and leave the market. That's what I can say. So I've explained this stuff right here, and you can see price came down and took out every stuff. Took me out, and of course I was not waiting for market down here again. Market have broken structure like how many times? Broke a break of structure, because I can't still be waiting. This can no longer be my structural range. My structural range is moving. Once the new range holds, the new range is not the structural range. The new range will have a new range. So this is not my structural range. So definitely did not hit SLA. I definitely did not. So let me just go over to GU. Let me go over to GU and see what GU did to me. See what GUDO mean. So I caught this as my I caught this as I caught this was the engineer liquidity. I took my point of interest from right here on GU last week. People in my signal group actually caught it. I'm not saying you should join my signal group. Man, just study hard, study hard, study hard. No need to join any signal group or anything. So price tapped into it and pushed up. I TP'd around here. I think here 5 RR. 5 RR, or I think I closed 4 that day. I closed 4 that day. But I was originally targeting 5 RR. I started seeing that retracement is gonna happen. Price will not just take out this trend line liquidity. So this was the trend line liquidity. And I know that price will not just take it out. You see the way I'm calculating myself, moving with a specific risk to reward. I think my SL was bigger. That's why there was just 5 RR. SL, I think I covered right here. So I exited the market. What was I waiting for? A re-entry. I prefer taking a re-entry, and many people were actually doing this stuff. Let me show you. I don't want the video to be more longer, that's why I'm not gonna start explaining extra stuff. So people were taking this as, I saw somebody take out this as inducement, and this as the breaker block. This is valid stuff. Like, as someone you studying the market, you will know what actually happens in the market. You know what really happens in the market. Probably have a bigger essay than this, like right here. This was the valid stuff, and I marked it out. I sent it for people in my trading community, not my signal group, trading community. So people were telling me I should drop setups and other stuff. I sent that to my trading community and told them, okay, market might react from here, but this is not a valid point of interest. That liquidity, but what am I expecting? I want price to use this and create a valid inducement for this 1 hour. This for the breaker block on 30 minutes. Let me show you. So on 1 hour, this is the breaker block right here. This is the breaker block. And you know where we're going to put our SL in this breaker. Even if you put it at the low, you see your SL. You just hear that I plan to put my SL. So, or like this, price will use this and create inducement for this to hold. That's what I told them. That's what price is going to do. And what did price do? Price did tap into it and create inducement for it. And if you see the way I drew it for them, they should have known that it won't take out this high. So if you're trying to create inducement for this other point of interest, you shouldn't take out an external structure. But I didn't actually take it because I was like, it's not worth the risk. If I try my best, I probably won't get. So this is where I would have TP, and I'll probably just get a 3 RR from it. So I was like, damn, it's not worth the risk. So I would definitely not go past here to target for TP. I would definitely not go past here. So 3 RR, I was like, man, I should wait for this other point of interest. And some people were saying, I saw somebody I shared the setup with, and was saying that price will not retrace to this point of interest. I was like, then you don't know range. You don't know how to trade within a range, like within a valid range. So if you know how to do that stuff, measuring from here to here, you can see that this point of interest was above the 50%, and this POI was below the 50%. I was expecting an extra liquidity for this to be valid. Price come and tap into it. Although price still disgraced me and hit SL, after hit my SL, start moving to the upside. This was very painful. It made Friday really painful. So I was trying to close the month. You understand? Trying to close the month in a lot of profit, but I couldn't because of this particular trade. I had a setup on Euro USD too. Euro USD was really something else. Really, it played out, and just see how tormenting Euro USD was. Let me validate it first. Let me validate the setup first. Okay. So plot it from here to here, because this is where we can consider a valid higher high, because it's here that price took out an internal structure, internal low. Price took out this low here. This would have been a valid higher. This is not a valid higher high for me. They didn't take out internal structure to me. This kind of internal structure I wanted to take out for it to be valid, but you can see that this one did. This one did take out this internal structure right here. So this was my higher high and everything. So this is price came and tapped into the 50%. Now as price came tapped into 50% and start pushing up, there is definitely a breaker block right here, and this breaker block right here, it's it's the swing the structural range setup. Price didn't tap into it. There's kind of a correlation between BTC, sorry, Euro USD and GBP USD. When price was doing this, was when Euro USD was creating that liquidity that I wanted it to create. That when price was doing this. So when price did this stuff and pushed to the upside, now that mitigated 50%, and now that's the discount zone that tap into the discount zone, and that tap into discount zone and probably has enough liquidity to push to the upside. So this is my new range. This is as simple as this on this. This is my new range. If I see a setup here, I will take it with consideration that the structural range setup is still valid. Hope everybody understand what I'm saying. This is exactly what I was explaining in my range video. You can go and watch it. So this is what we have here, and price came this the point of interest triggered the break of structure, liquidity was protecting, liquidity even broke structure, a valid shade. So we have a point of interest in a valid zone. This point of interest was in a valid zone. You see the way I validated this setup. Valid zone, valid zone. So see what I was expecting price to come down, tap into it and move up. See what price did. So you can clearly see in this scenario, price came down, took out the liquidity, didn't tap into my point of interest. Price retraced 80% of my TP. This is where my TP was, an external high. This is where my TP was. Price retraced about 80-70%. And I was like, this shit ain't gonna hold anymore. And at that time, GPUSD just hit SL. Is in psychology really comes in. GPUSD currently hit SL, and I was like, damn, this shit might not really hold. EURUSD started pushing to the downside when GP was hitting SL and hit SL and all the rest. Price still came back down, tapped into this point of interest and hit TP. In many scenarios, if price does this to come back to your point of interest, you're definitely hitting SL. When price takes out the inducement, you don't tap into your point of interest, come back down, tap like 70-80%, come down to your point of interest, you're definitely going to hit SL. But in this scenario, this is not what happened. So I don't really regret much. I don't really regret much for deleting my limits, but it was really painful, really painful. Trying to close the month, and the month just closed me. So this stuff was about 6 RR trade that I missed. Painful. 6 RR, really crazy. So this is exactly what I missed, and that is it. Now before I end this video, I mean this 45 minutes, I don't know, many of you watch it. If you want to learn from me, you can DM me on the link in the bio. You can, if you want to learn directly from me, you can DM me with the link on the bio. That is my Telegram handle. If you DM me, what the price, 150, 3 months. I teach for 3 months. I teach you this stuff for 3 months. Like, we trade together, we do everything together, 3 whole months. You don't understand what I'm doing in 3 months. I don't know. So I was considering that those 1 month classes doesn't really help anybody. See people that attend 1 month classes and they still need a lot of help. So 3 months class is what I do. 150. 150. You already know it is in the D's, not in there in the whatever, is in D's. I want to mention currency here. So you understand what I mean. So this is exactly what happened last week. Did I take SL? I GPUSD hit SL and BTC. That was my 2 SL, 2 TP, GPUSD and BTC still. So this is exactly what I did last week. We're hoping that this new month will be fire. You guys should just stay with me. My Signal group is, I don't really recommend anybody to join any Signal group or anything. So go and study. So I won't talk about Signal group. Go and study. This new month coming up, September, is gonna be fire. We're gonna be chilling the market like. So everybody should just get ready, study. This weekend you should study, backtest, and see everything. All this range something I just showed you right now. Go and backtest it. Valid point of interest. Go and backtest it. That rules for picking a point of interest. Point of interest, not the everything I taught here. That point of interest that it needs to trigger every structure is Tony. I came up with that stuff. This other stuff I added direction. This was my own understanding after backtest and everything. I was putting Tony Ike's own in my community. So if you want to get all this everything I say here, you can take your jot when I'm talking, you jot, watch again, you jot it down. That's how you get it. So see you on the next video. As usual, I'll do a polling, and I will ask you guys what the next topic, and there will be no next video until this video gets 1k views. 1K views, and you guys should try and like. If you watch something you like, appreciate, subscribe. I'll be tagging my previous videos on this video, the end of this video. Watch it then. Tap anyone you like and watch. See you on the next video. I hope you enjoy this content. I hope you gain the lot from it. Me that I even teach, I gained a lot from the video. So this stuff is just learn, because all this stuff is just freestyle. Like the whole teaching is freestyle as usual. So if you study enough, you get things right. That's how we do it. It's almost 1 hour video. Hope you guys will watch it though. 1K views, a reasonable amount of likes. If you watch you like,